Hi, this is Dr. Kerry Johnson. As we do often, at least every couple of weeks, I give you a market update that you can use to help your clients understand the market. But most importantly, it's a reason to help you to call your clients on a 3-month basis. Our model has always been catch up, update, 5-step bridge, and possibly get referrals. Catch up on the family, catch up on the last time, if anything that happens is the last time you talk to your clients. Number 2, update them on what the economy has done, what the economy may do, what the market has done, what the market may do, which is what we're going to talk about today. And thirdly, just listen. Simply start out the 5-step bridge by saying, how do you feel about this stuff? Any assets you have with me are well looked after. Are there any assets out there that you might be concerned about? And then if you can't find any needs, all you have to do is ask for a referral. So here's our market update. I've talked about what to say during that 3-month phone call for many, many months. You already know that. So here's a new market update, our post-election version. 3 things. Number 1, the market was up 7.5% in 1 week, a couple of days actually after the election. The markets always do well over time, whether or not the Republicans are in power or the Democrats are in power. The focus should never be about politics. It should always be about the Fed. What is the Fed going to do? Are they going to raise rates? Is inflation going up? Are they going to keep rates where they are? And it turns out right now, the Fed is very accommodative. There's a pandemic, obviously. They're going to try to keep jobs. They're going to try to keep the economy from going into further recession by supporting the economy, which also supports the stock market. Number 2, manufacturing is up, unemployment is down. That's the good news. Unemployment now is at 6.8%. That's pretty extraordinary, thinking that just a few months ago we were at more than 30% unemployment. We lost 20 million jobs since March. We've gained 10 million jobs back since the same time frame. Now, it's not all roses and wine. That the Fed is warning currently of economic risk, especially if Congress doesn't come up with any kind of stimulus. The CARES Act was stalled, and also further clarification and also extension of the Payment Protection Program, the PPP. Likely, especially during a lame duck session, the Congress is likely to act before January 20th inauguration. And if that happens, then the Fed probably will do not a whole lot more. They'll keep rates where they are. If that does not happen, there are going to be a lot of service workers, especially, that are going to be having a lot of problems, and the Fed may step in by buy more bonds, which is their way of staying accommodative. But the Fed has said they're going to keep rates where they are for the next 3 years. Inflation currently is just about above that 2% magic mark. When it goes above 2%, the Fed acts. When it goes below 2%, the Fed kind of thinks they're doing a good job, and they certainly don't want to become disinflationary. They always want a little bit of inflation within things. November 5th, here's where the Fed is concerned about. November 5th had the highest infection rate in the U.S. of any single day since the pandemic started. We have 120,000 infections in 1 day. Now, that's really interesting because Europe is currently having massive shutdowns. I know that because I can't even get to see my house in Portugal. I haven't been there since this time last year. There are not a lot of Americans in. The whole economy is shut down, and I correspond with my friends in Portugal, and they tell me that the restaurants are open on a limited basis outside. They close down at 10 o'clock. I mean, it's not quite as bad as a massive shutdown, but it's nearly as bad, the lockdowns. Number 3, politically, the Senate may stay in Republican hands. So even though Joe Biden is the president-elect, the Senate may stay in Republican hands. And by the way, this is the silver lining here, the stock market loves a divided government. That means there's no massive change. So the stock market hates change. They hate uncertainty. They love certainty. And if that does happen, where the Senate stays, it'll block a lot of the things like the new Green Deal, packing the Supreme Court with more justices, ending the filibuster so the Senate can just rubber stamp whatever the House wants to do, and as well as next admitting 2 new states, presumably Washington, D.C., and also Puerto Rico. So if that happens and there's a runoff, by the way, the runoff in Georgia, and this is good background information for you and your clients to talk about. There's two senators right now, Republican senators in Georgia. One is Perdue, and the other one is Loeffler. Loeffler was appointed to the Senate. They're likely to be elected in a runoff, but nothing's for sure. There's a lot of baggage there, a lot of political turmoil there. There's going to be massive amounts of money being spent on Atlanta. It'll be a Donnybrook, if you will, but it's likely to still stay in the Senate. As that happens, and by the way, voters also like a divide of a government. If that happens, then the stock market probably will go up for the foreseeable future. So now you got your three talking points. The market is increasing, manufacturing is up, unemployment is down, and the Senate may stay in GOP hands, which means that the country will not see any massive change. So tell this to your clients, but don't forget, once you do this update, listen to them talk. Listen to them talk about the worries. Try to find new assets, and if nothing else, ask for a referral.